Thanks for this opportunity to introduce Mandalay Resources to you. This is a producer of about 7 years and with a proven strategy for success. We are a values-based and value-focused company. We describe our success from multiple perspectives, all of which have to come true. The shareholder value comes with our employees' values, our communities, our environmental impact, and our customers. Not either or, but all together. We have a proven strategy for success. We acquire undervalued mines in accretive transactions. We turn them around and crystallize that value that we see in the market through exploration, through changing mining methods, upgrading plants, and so on. And then we return cash to shareholders and repeat. We've done this 3 times through the entire cycle in the last 7 years to great effect, and we're looking for more right now. At the current time, we have 3 operations. Our most recent one is Björkdal, acquired in 2014 in the north of Sweden. That is just now coming into its own with operational improvements. Our first mine was Koster Field in Victoria, Australia. This was acquired in 2009 with no reserves, no resources, no employees, no customers. We reopened it. It's been mining for 7 years with almost 4 years left in reserves and new targets showing up all the time. Cerro Bayo, Chile is our 3rd property. It is currently on care and maintenance due to a mine flooding incident earlier this year, which did curtail production below expectations. This one had already produced its 3 to 5x returns, and while it's a blow to the share price to have this one on care and maintenance and have its 4-year mine life postponed, this is certainly a resource we look forward to restarting once all the permits are in hand. The results of this acquisition and turnaround strategy is consistent performance across the price cycle. We acquired our first 2 operations, Koster Field and Cerro Bayo, coming out of the global financial crisis, restarted them both, and they were both hitting on all cylinders through 2011 to 13, when antimony price was up to $16,000 a ton, gold was $1,600 an ounce, and silver was $30 to $35 an ounce. During those 3 years, we essentially refrained from overpriced acquisitions. We optimized the operations, paid down all our startup debt, paid down all our vendor loans, exchanged our warrants for shares, and began our dividends. When gold price declined again and bottomed out in 2014, we acquired Björkdal in Sweden and our one development asset, Chaquicoyo in Chile. Through this time, we've matched production and reserve growth. We have not expanded production past the amount that we can support with reserves. Furthermore, as we've added operations for no increase in overhead, we have driven down our overhead cost per ounce to what I think is approaching the lowest in the gold industry, down in the low $30 an ounce. It cost $4 to $5 million to run this company, whether there's 1, 2, 3, 4, or 5 assets in it. We did have a bit of a higher year in 2014 with the acquisition-related costs of Björkdal, but the annual spending has dropped back down. And likewise, we're buying built-out mines with a sustaining capital stream required, and the amount of capital per ounce of production each year has actually trended down for all of our last 7 years of production. And through this period of time, we've added reserves cost effectively. We buy at cost per ounce of about $160, which is substantially lower than the average acquisition cost in the industry. And then we add brownfields reserve additions for something around $50 an ounce, making our average exploration and acquisition cost per ounce, and this is for fully built out and producing reserves, at about $80 an ounce. And this track record has actually delivered superior value for shareholders. At the moment, we are in the penalty box for the Cerro Bayo event. But if you look back to the founding of the company, we've delivered almost 2x value to shareholders of our peers and almost 3x of the gold seniors. So this buy and turnaround strategy works, and we've done it 3 times. And we believe it's a repeatable process that we can do over and over again. It requires patience and attention to operating detail. With a bit more time, I could talk through the turnaround at each asset. Suffice to say, at Björkdal, we have basically kept the mining rate the same, and actually mining cost per ton has increased a little bit because we're actually throwing away 30 to 40% of the ore that the previous owners actually processed. We put in an assay lab and hired geologists to tell us where to mine, and in fact the grades have come up by 50%. Processing rate, again, about the same. Processing costs a little bit up to deal with rehandling and so on of our selective mining and processing. And what's happened then in the last 2 quarters, all this has paid off in the 2 highest production quarters on record since Mandalay ownership, and the cost per ounce in the bottom graph is dropping down into the low 800s range. And we expect to continue driving it down as the grades come up over about 1.6 grams per ton. Most exciting at Björkdal, we have bodies of high-grade skarn emerging. Turns out that these were drilled but not assayed by the previous owners, since the lore was that the gold occurred in white quartz veins in black rock. And in fact, we've mined through some of these bodies that are in blue here, and the isolated intercepts in these ore bodies have been confirmed by continuous multi-thousand ton per day processing through the mill at 3, 4, 5 grams a ton. We are now reassaying about 2,000 intercepts, which were stored for the last 20 years, unsplit by previous owners, and expect to have the results in those green holes back by the end of the year. Koster Field's turnaround was very similar. We bought this mine with no reserves, no customers, no resources, restarted it, grew production, lowered mining costs, grew processing rate, lowered processing costs, until now we're in a very steady state operation with gold production now directly related to grade, which we predict very well, and cost per ounce obviously inversely related to grade. And we are on the track of the next ore body about 500 meters north of our existing mine. Cerro Bayo followed the same trend until the flooding event. The issue there is that we need 8 permits to restart the mine for a 4-year mine life on 4 veins, and we cannot restart in good faith until we get all 8, because if you mine them one by one as you get the permits, that's the worst cash flow scenario there is. Looking ahead, we have organic value drivers, but really the big one that you need to watch for is acquisition, and we're always on the track for those. So if you invest with us, you can rely on us to deploy capital in the same way, acquiring only in accretive, discounted valuations, and delivering reliable value increases in the 3 to 5 years beyond, and then returning cash to you, the shareholders. Thank you very much.